Good afternoon, everyone. Today I'm chatting with Tim Mizuno and Shilo Sazwan from Sage Potash. In today's interview, we discuss the potash market and we get some insights into how it's priced and what the domestic market looks like in the US. We also discuss Sage, where their project is, what the plan is to move it forward, and what investors can expect out of the company over the next year. All right, everybody, enjoy the interview. Tim, Shilo, thanks for joining us.
Yeah,
No,
great to be here. Thanks for having Sage here today.
So let's start off with the potash market here. We've had a couple of potash companies on in the past, but it's an area that I think a lot of people in our audience are relatively new to. The segment seems to be dominated by mining majors. We got companies like Nutrien, Mosaic, and BHP, just to name a few. How hard is it for a small, newer company to break into the market?
Yeah, well, if I can here, and that's a great question. If I can, let me set the stage a little bit. So, global potash demand is about 73 to 75 million tons per year, and it grows by about 2% every year as well. And that's predicated on global food demand and growing all the food and crops that we enjoy every day. What's unique about potash is there's four producers that supply about 60% of that demand. And those are producers in Canada, in Russia, and in Belarus. So it is a very, very concentrated market when you think of it from a supply standpoint and where the potash actually ends up going around the world. And the reason being is there's a huge capex and a huge timeline associated with building potash mines. Usually you're talking decades in terms of time, and you're talking 5 to 10 billion dollars in terms of capital. So it is typically a very hard thing to do is to enter into the potash market. Where Sage is taking a different route is we're going at it incrementally and in a smaller route inside of a market. So it's relatively easier for us to be able to come to the market with potash production.
Tim, my understanding is you've got a bit of a background in potash, so maybe you can help enlighten us in terms of how potash is priced. Like, is there a spot market? Is it mostly contracts? How does that work?
Yeah, I've been fortunate enough to spend about 15 years in this market and directly related to commercial. And so you're absolutely right. Most of the world is on a spot market basis. There are two contract markets, and that is typically China and India when people think about that. But the US itself is a spot market and has several benchmarks. So the benchmarks are typically where the potash is imported from. So the port of New Orleans down in the deep south of the US is typically where offshore potash is brought in. But then there's also several benchmarks around. So, the Midwest is one that I typically think of, right where the corn and soybeans are being grown, but also in the Pacific Northwest. And that's exactly where Sage is located, right around the farmers in that area who consume potash.
You guys, as in Sage, you guys are US based, at least the project is. My understanding is that the US market as a whole, when it comes to potash, is mostly import focused. How big is the potash industry in the US, and is there demand right now for local product?
Yeah, great question. So you're right that the US market is about a 10 million ton market per year. A lot of it going into the row crops that they grow. Out of that 10 million tons, almost all of it is imported. And so it's either imported from Canada, Russia, Belarus, or the Middle East. And of course, that's all dependent on what's going on with geopolitics. But very, very little potash is produced within the US. And if you can think of the thousands and thousands of miles that that potash has to travel to get to that end user, who is the farmer, it goes a long way and it's a very expensive way to do it. And so Sage Potash, as you alluded to, is located in the heart of the US, very close to the growers, which gives us about $100 per ton advantage when you think of delivering it to a farmer.
So the Trump administration appears to be pretty focused on critical minerals. I think that that's fair to say at this point. Do you think that that includes potash?
It does. As of early this year, potash has been added as a critical mineral in the US, and that was under executive order. And so, what does that mean for a potash producer? Well, it means that the administration is going to help, and that's in terms of permitting, that's in terms of financing to bolster that potash production. because it is something that is needed for food security to make sure that, the crops can get planted and the yields can be attained in the US. And so the administration has recognized it and elevated potash to the critical mineral list.
So let's talk about Sage Potash. You've decided that you're going to hitch your name to this project right now. You stepped on as the COO. For our audience that's new to the story, it's the first time we've ever had anybody from Sage on. What's the high level overview of the company and what got you excited about getting involved with the project?
Yeah, thank you. And like I said, I spent 15 years in the potash industry, and Sage was the company that got me really excited. And when I think about Sage, really there are four key pillars that get me excited. The first one is that it is a high quality resource that Sage has developed and has acquired. So the mineral lease is massive. It's in the Paradox Basin, and it's a very, very high quality resource, meaning the potash content is very high. The insolubles, the contaminants are very, very low, and it is an ideal bed for potash development. So that's thing number one. Thing number two is that we are, like I said, located in the US, and to be right next to your farmer customers and your grower customers is incredibly important from being a reliable source of potash to them and be able to get them the product that they need and when they need it. The third part that I think about is that the company is very advanced in permitting, engineering, to get this project off the ground and get into the construction phase. And that's why we've got Shiloh here, and I'd like to introduce him in just a second and talk about where we are in terms of permitting and in terms of construction. But lastly, I want to say is that the project itself is de-risked because we are a solution mine and we are targeting 300,000 tons of production for phase one, that we can go about it incrementally and advance it a lot quicker than potash producers have historically been able to produce potash.
Okay, so Shiloh, you're the strategic operations partner for the project. What can you tell us about the stage of development that the project's currently at, and what are the next steps to advance the project?
Yeah, thank you. We're actually quite developed in our where we're going with this project. We have secured our the main plant itself already. Like where my background, I'm a big believer in trying to find as many good used equipment as you can to alleviate delays and new equipment and that which comes. And we've secured a plant that is never been used. It has a 300,000 ton capacity right off the bat. It's in crates. So with that, we've secured it. It's ready for shipment. With that, we are working on our final engineering, which is incorporating that plant design into all our engineering aspect. And for the permits, that is the final stage, is where we are working with just getting the final drawings done, the engineering that needs to be done for the permit aspect. So we're very far developed on our project.
Okay, Tim, I'm going to turn it back over to you. Are there any current exploration plans for the project?
Yeah, today we're very focused on getting our plant ready and ready for construction. And we're also getting ready to do our last drilling to close our permits. But what I tell our audience here today is that most importantly, we are advancing partnership opportunities, especially in around the area where we plan to be operating.
So, my understanding is that there's currently no PEA out, but the plan is for this to be an in situ operation. For our audience, what does that mean?
Yeah, well, first, our we are undergoing a PEA right now, so we've got that quite advanced, and we expect that it's going to be ready here before the fourth quarter. And you're absolutely right that we are in situ, meaning that we are in market. So our customers are right at our back door. They're people who are we're going to be neighbors with, we're going to be living with, and that we can supply potash with for the long term. So going back to, what I was saying earlier, we don't need to travel the thousands and thousands of miles that potash typically does today to get to our grower customers.
So, Tim, I want to ask about how you guys are talking specifically about in situ mining, which my understanding from the junior mining world usually means that you are pumping fluids into the ground and taking them out, as opposed to conventional mining, which I think most of us think of in terms of hard rock. Maybe you can explain to us how that works and the difference that that means in terms of costing and permitting.
Yeah, yeah. So when I think of conventional mining and the biggest mines around the world, you can think about being about a kilometer underground and sending your workers underground, each and every day. The span of an underground mine can be the size of a small city. So if you're traveling in a vehicle to the mining face, you can be, an hour and a half to 2 hour drive every day to get to that mining face. So it's a very big, a very large and labor intensive way of mining potash. And typically in potash, what you'll do is you'll bring up the ore, you process it, and then you're left with a tailings pile that has all the insolubles, all the clays, and everything else that you don't want, in your potash. You create this tailings pond and you manage it over, hundreds of years. Where solution mining is quite different. So solution mining is done today in potash. There's 3 to 4 solution mines around the world. And you're absolutely right. It mirrors oil and gas and other industries quite well, as in you pump a brine down, you saturate it, and then you bring that brine up and leave everything that you don't want underground, and then you process it from there. So it's a very environmentally friendly way to produce potash. And with Sage specifically, the depths that we are mining, which are all proven depths, the temperature is about 68 degrees Celsius, which gives us a huge advantage when we look at having to heat that brine to dissolve the potash before you bring it up. And so, from a permitting perspective, typically a solution mine is a little bit faster because you don't have the same footprint above ground that you would otherwise. And it can be done a lot faster because you don't have to develop these huge mine networks a kilometer underground.
So Tim, I have to ask this question just because we ask all companies we have on, how it is in the Canadian junior markets. I have to ask about the share structure, who the major investors are, and if I were watching this video and I decided that I wanted to throw some chips onto the table and place a bet on you guys, I'd want to have comfort in the share structure. What can you tell me to give me that comfort?
Yeah, I could tell you that we are a tightly held company, that we have some investors that have been with us since day one who really understand the story of potash and the opportunity that Sage has. The investors don't, none of them have more than 20% ownership. Everybody's below that, but have been growing us with us along the way. Sage is traded both on the TSXV and on the OTC markets. And something that I've been incredibly happy about over the past few months is we've seen an incredible increase from our friends in the US side of getting interest into Sage.
So last question, Tim. If I have you guys on my watch list or I am an investor, what does the next year look like? What's the game plan? What should I be looking out for? What are you guys trying to achieve?
Yeah, I think number one, you're gonna see the PEA come out, like I said, in before Q4. So we'll have third party confirmation of our resources and of our business plan. And by the way, we've engaged Respect, one of the world's leading authorities on potash deposits, to help us with that. It's thing number one. Thing number two is you're going to see Shiloh's team really accelerate what they're doing with the engineering and the construction and drilling to be able to close off the permits and get us ready for potash production. You're also going to see progress on the operations and on the partnerships that I alluded to earlier.
All right. Well, Tim, Shiloh, thanks very much for hopping on today. I think that this is certainly an exciting project, even more exciting with everything that's happening in the U.S. and more of a domestic focus on production of resources. So I think it's going to be one of those names that you guys have a lot of opportunity in front of you. So thanks for hopping on, and let's continue to do this in the future as you guys roll out on your strategy.
Thank you.
Wonderful. Excited about that. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. Folks, if you want more mining content, check out our channel right now. We have lots of mining earnings coverage, and we also have a ton of mining content over on our website at thedeepdive.ca. All right, everybody. Thanks for watching.